This is Jason Donovan with the Wealth Titans, and today we are going to be tackling an age-old investment question. Is investing an art or a science? And we're going to explore the answers to this question and not only see how it's relevant to us, but how a basic understanding of these principles can actually dramatically increase our investment results. And this is important because the frame of mind and beliefs from which we operate while investing will ultimately be the biggest driving factor of our success or failure. The artist's view is primarily dependent upon human judgment and human experience. Computers are seen as good tools, but at the end of the day, the human element is what makes the difference between success and failure. On the other end of the spectrum, scientists believe that computers actually do a better job of investing than humans, and using computers will improve investment results because it's removing the human element. So to explore the similarities and differences between these two camps, we're going to look at the example of an architectural designer. The designer must use their creative artistic talents when they create a vision for the building in their mind. And most designers can draw such ideas freehand, but when actual blueprints and measurements for the building need to be drafted, precise measurements and calculations normally ensue. So the artist investor stops at the design phase and jumps into the market without taking the time to measure and draft blueprints. The scientist, on the other hand, jumps into the measuring and drafting of blueprints without any inclination for the overall goal or purpose for their investing. The distinction and understanding between these two is important because they both have their place. But with so many different experts out there claiming it's one or the other, investors are finding themselves not only confused, but forced to choose sides. And this choosing of sides, unfortunately, often leads to some extreme behaviors that actually wind up negatively impacting investment performance. Those who subscribe to the art side tend to have no solid plan, rushing in to find opportunities and make decisions as they go. As a result, they become far too reactionary to the current market developments and conditions. The principal issue with this behavior is being over-involved in the market, constantly looking for opportunities and not allowing their first ideas to come to fruition before jumping into the next latest and greatest thing. In contrast, those on the scientific side choose an investment plan or strategy based upon a timeline and stick to it religiously through thick and thin. And these investors ultimately become disengaged and hold on to investments way too long past the point of no return. So instead of dealing with losses and losing investments, they shy away and believe if they don't look, it's not there. So successful investing falls somewhere in between these two camps. And when developing, testing, and implementing your investment plan, you'll likely find yourself drifting closer to one side or the other just based upon your personality. Let's look at some key ways we can use this information in the implementation of our investment plan to serve our best interests. So your investment plan needs to allow room for both the artist side and the science side to have its maximum effectiveness. So you want to be an artist when it comes to compiling the strategies and making up your investment ideas. You want to be a science when it comes to picking specific investments for your strategies. You want to be an artist when it comes to determining your economic worldview and possible speculative investments, and you want to be a scientist when it comes to allocations among different asset classes. Finally, as a scientist, you have to accept the fact that you're not a total robot, and opportunities will surface that the inner artist opportunity seeker simply can't resist. So when this happens, ensure that you have a part of your allocations set aside so that you have money for these more risky speculative ventures. To wrap up, let's directly answer the question, art or science? And the answer is both, with the caveat that the less experience you have, the more scientific you should be. Both have their advantages and weaknesses, but combining these two and being cognizant of when each is appropriate is a surefire way to dramatically increase your investment success. Thank you for watching. I hope you found this informative and actionable. If you have any questions, please let us know in the comments section below. And don't forget to hit the subscribe button and check out some of our other videos. To your investment success.